Micron is pumping up to new highs. Nvidia is up 5%. We have software stocks coming back. We have Michael Saylor selling Bitcoin as well, after he said many times you don't sell your Bitcoin. So let's talk about all this. Let's go through what you need to know going into Monday. The market's opened for about an hour right now. We have Micron hitting new highs. I actually have a 2x trade on Micron right here. You can see I've been talking about it for a while, but it's not like I got in super early, just got on a dip and went 2x long, which is just adding leverage to this trade. We're up about 100%. Micron pushing well over $1,000 here today. It looks great. Now, why is Micron doing well? We'll talk about that. Let's just dive into the broader market first. As you can see, slightly red across the board. A lot of this is due to oil spiking up 7.5%. And you can see just like a massive spike if you're actually watching the video, a massive spike just a little while ago. And why was that? Well, Iran came out and said that it was ending all negotiations with the U.S. and vows to completely block the Strait of Hormuz, according to CNBC. Yeah, so we don't know what's going to happen now. It just seems like it's ping-pong like every day or two. So we hear this, and then we'll hear that there actually are negotiations, then oil will come back down a little bit, then we'll hear that they're not, and then it will spike back up, back and forth, back and forth. So I'm not putting too much weight into this, just like I didn't put too much weight into it last week when they said that it was almost, that they had almost come to an agreement on a ceasefire. Now, Micron, specifically, we'll talk about Micron, then we'll go into some of the other stocks, got another price target raise from 530 to 1100 at Raymond James. Now, they're playing catch up. 530 was way too low. I mean, it's been above that for months now, and 1100 is probably too low as well. I mean, that's 7% away from where they are right now, and we could hit that by the end of the day, knowing Micron. This is just one of the handful that we've seen from different analysts recently, and a lot of them are citing that, they have longer term contracts, so now naturally we can see further into the future on the revenue, and the earnings per share is going to be higher than what we were expecting. So yeah, we're going to see a lot of demand in the future, and that makes us raise our price targets, which we already knew that they had 3 and 5 year contracts. We knew that already. So I think now they're just trying to save face, and that is making some people feel more confident, probably hedge funds, Wall Street, to go buy Micron. Now, I've said for a while that the end of this month is really important because they have earnings, and also if their earnings are good and they provide good guidance, a lot of people that are underweight Micron are probably going to have to buy because it's the end of the second quarter, it's the end of the first half of the year. Big money managers have to show results, and when people are making hundreds of percent on Micron, hundreds of percent on AMD, they're going to be talking about it to their friends at the country club. They're going to be talking about it in the office, and you better believe that if someone's invested in a firm that doesn't have exposure to these stocks, they're going to be pissed off if they're underperforming. And it seems like such an obvious trade to them. Why do they have their money somewhere that costs them a lot in fees unless they're going to outperform and get at least what their buddies are getting? So I think we're going to see some firms go and rotate capital in before the end of the quarter to say, hey, we were underweight, but now we're on the right train. We are also investing in these stocks. And Micron's earnings are going to be very important for that since they come right at the end of the month, right before the end of the quarter. So be on the lookout for that. Nvda was at a conference on the other side of the world, and they announced their first open humanoid robot reference design built for robotics research. So, what are they doing? Are they building the robot? No. They basically have a software suite, and they're going to be selling the brain, right? So, the chips and software. They basically want to be the platform that everything is built on, right? I think this makes sense for them. Picks and shovels play on AI robotics. We saw Figure last month. One of their robots was able to sort hundreds of thousands of packages, almost 250,000 packages, without any help. So humanoid robotics are coming quicker than a lot of people expect. I know sometimes they get delayed, Optimus, Tesla's robot, has been pushed back, but Nvidia wants to be the picks and shovels play, and when I say pushback, they just haven't made as much progress as Elon said, like in the time frame that he thought that they would ramp up. So they are coming. Maybe it's more specific, less humanoid than that. Like sometimes you don't need to build out a whole humanoid when you just need it for like an arm. There's a video of something that they showed. I think it was maybe this video. Where they just have an arm doing stuff instead of a whole robot, right? Of course, the humanoid robots are maybe a little bit more versatile, right? They're not stuck in one spot doing one job. They can do a handful of things, but a lot of things are repetitive and they just need an arm right now. But obviously, when we have humanoid robots, that will unlock unlimited labor, which I think will definitely help global growth. And yeah, it'll be really profitable for the companies that sell parts of it or software, or the companies that use it, like Amazon. I've said several times, I think Amazon will be one of the biggest winners from robotics and from humanoid robots and all the other robots. Keep in mind, they already have a lot of robotics in their warehouses now. But yes, Nvidia announced that. You can go read through it. There are a lot of posts about it as well and some other stuff that they announced. But yeah, Nvidia today is up a decent amount on this news, up about 5%, up to 220. Now, we also have, just in general, we have the whole software space moving up. This is from a couple hours ago. Oracle up a lot, Snowflake up, DDOG up, Intuit up, Now stock up, Adobe up, CRM up, Microsoft up, Palantir up, etc. So why is this? Well, Jensen talked about software. Let's actually play this here.
I started to talk to you about how AI has moved from generative AI and the other waves of AIs that are coming. The next wave of AI was agentic AI. And today we can say that agentic AI has arrived, that useful AI has arrived. Now, what does this mean? This is GitHub. This is, of course, one of the first applications of agentic AI is software coding, one of the most valuable professions. Incredibly large ecosystem, 30 million, 40 million professional software developers, probably another couple of hundred who are students and enthusiasts and so on and so forth. But say 30, 40 million software developers in the world code for a living. This represents most of them. This is GitHub. The pull request is when they download software, they modify it, and commit is when they push it back up. Okay, and so if you could look at this, in 2023, the number of commits was 300 million. 2024, 400 million. 2025, 500 million commits. In the first few months of 2026, it has nearly tripled. Now, what does that mean? 30 million software developers representing about $3 trillion worth of GDP, producing that's what they're paid, $3 trillion worth of salaries per year, which is generating economic growth for the rest of the industries. Say $100 trillion of the world's industries is generated by $3 billion worth of salary. That $3 trillion worth of salary is now producing nearly 3 times as much output. It's effectively a $9 trillion productivity from $3 trillion of salaries. Does that make any sense? The difference is absolutely extraordinary. This is the potential. This is the promise of AI. The number of engineers, software engineers, is actually increasing. People talk about AI reducing jobs. Complete nonsense. It's causing more software engineers to be hired, and the reason for that is very simple. If you can hire a software engineer and you could generate $9 trillion worth of productive work, why wouldn't you want to hire more software engineers? If that line was flat, then obviously people will hire fewer software engineers.
Now that's similar to what he said in the past, basically that AI, this is actually from a different video back in March, but AI will be using software in general, right? That AI is very good, but it still needs a way to categorize, to take notes, to make sense of all the data that it has, so it will use software in the future, right? Why rebuild a microwave when you can just go buy a microwave, right? It might not be actually efficient with all the different problems that it has, like to spin up a new Adobe, right? Or spin up a new Salesforce. It might actually, just like building a microwave, it might just be way more efficient to go spend $20 to go buy a microwave rather than have AI just build one. So yeah, just in general, kind of reiterating that it makes sense to hire software engineers, that these companies are going to be used. And yeah, because of that, the whole software space is up. Him just reiterating that it's a good time to, it's still going to be used in the future, and kind of hinting that might be a good time to buy because everyone thinks that they're worthless. Now, Meta is one that a lot of people have not been wanting to buy recently. It's down 3.6% today, almost to $600. It just barely got a pump last week, and already it's sold off. Now, I actually bought $10,000 more of Meta today, adding to my position. I think Meta is such a no-brainer for the future, just because, like, what's the downside with Meta? How far can it go? Well, we saw it go down to 525 or something like that recently, just for a couple days. But there wasn't really a good reason for it. If you look, like, in general, it's been floating around this price for a very long time. It was actually $600 back in November of 2024. It's still down about 23% from its high. And in the meantime, they've actually been growing earnings significantly. I mean, back in 2024, they had revenue of $164 billion. Now it's at 215. Back then, they had lower net income, lower EBITDA, lower free cash flow. In many ways, the company was just worse off. Now they're talking about even maybe selling extra compute to create some kind of, maybe create a cloud business similar to Amazon, Google, Microsoft. And they're one of the only companies that could do this, that could actually compete with these companies because they're already so profitable and have so much compute. This could make them a ton of money. And I think people would start, Wall Street would start re-rating them. So instead of a 20 forward PE, they might be re-rated to 25 or 30, maybe even higher when times are good. And you look at how quickly they're growing. The revenue growth is going to approach 30% this year. Highly profitable, selling at a 20 forward PE. I just don't see much downside in this company. And every quarter that stays around the same price, it just gets cheaper and cheaper and cheaper based on their earnings and revenue and all that. Of course, they are spending a lot of money. I wouldn't mind if I would actually really like it if they cut off spending to the metaverse and just, stop trying to go down that avenue. I think that's a major catalyst for the future as well. They pay a dividend and buy back shares. So they're highly profitable. Let me know your thoughts on this underneath the video. I just don't see much downside in Meta right now, and it's not gotten any love for the last year and a half. I think if they switch a focus to profitability, even if they're spending a lot on CapEx, but they focus less on long shot bets, that they'll get a lot of love from Wall Street. And also I think that they in general can just monetize more in the future if they want to as well. Let me know your thoughts though on Meta underneath the video. Now Michael Saylor, he runs Microstrategy. Well, he was a CEO, now he's just on the board, but he's basically the head of Microstrategy, we'll still say. They sold 32 Bitcoin for $2.5 million. Now, I made a full video about this on my main channel. A lot of people are freaking out because they hold, I think it's 700,000 or 800,000 Bitcoin. And they've been buyers for years and years and years and never sold. But a lot of people are worried right now. I explained in the full video why they're doing this. Basically, they hinted that they would do this. This does not really affect Bitcoin's price. Them selling the 32 Bitcoin, what affects Bitcoin's price is people knowing that they are willing to sell Bitcoin. and that they could sell a lot in the future because they've just been net buyers in the past, but now they're talking about selling. Basically, what they've said is that if their Bitcoin is worth more than their company stock, they want to have the option to sell Bitcoin. It makes sense. In the past, they've sold shares of the company when the company was overvalued compared to the Bitcoin holdings, so they could go buy more Bitcoin. Let's say the company's worth $2 billion, but they only have $1 billion worth of Bitcoin. They sell shares, and then they go buy Bitcoin with those shares because they're at a premium. The opposite is true too. If they're selling at $500 million, the company is worth $500 million, and they have $1 billion worth of Bitcoin, they might sell some Bitcoin and buy back shares. So they've just said that they want the flexibility to do that, and they're signaling now that, hey, we aren't scared to sell some Bitcoin. And I think this is more of a test to see how the market reacts. And I don't think they really care how the market reacts because they'll just buy more Bitcoin if it falls further down. But they want to signal to the market this is something that will happen, right? So be ready. I'm not concerned about it. I do hold Bitcoin in my portfolio. I'm not worried about them signaling that they're going to sell. I think this has always been something that they were going to do at some point, especially once they focus more on credit instruments. But yeah, it's something to pay attention to. I do think we're going further down later this year, just like we do every 4-year cycle. But I'm still holding onto my Bitcoin because I'm not trying to time it that much. I think it's going to perform very well over the next 3 years or so. So I'm not trying to time it out perfectly. That's always been a bad thing to do. And now the market cycles are very similar. So yeah, the fact is you could try to do that, but I don't know exactly what's going to happen. I think there's too much money to be made by trying to time it. And also I realize that I'm not perfect. My psychology could take over if I start trying to sell right now and try to nail the exact bottom. I don't think that's a good idea for something that you want to hold long term. But let me know your thoughts. Thank you so much. I appreciate it. I'll see you all soon. Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence.